Are we witnessing the next tech revolution or the start of a global financial meltdown? A small Chinese startup, DeepSeek, has shaken the very foundation of global stock markets, wiping out nearly $600 billion from Nvidia's market value in a single day. Yes, $600 billion, the largest single-day loss in Wall Street history. What happened, and what does this mean for the future of AI and the tech industry as a whole? Stick around because this story is as dramatic as it is game-changing. Before we dive into the mind-blowing details of how DeepSeek turned the tables on tech giants like Nvidia, Microsoft, and Alphabet, make sure to hit that subscribe button and press the bell icon for updates on stories that are shaping the world as we know it. Trust me, you don't want to miss this one. Let's paint the scene. On Monday, January 27th, global markets went into a frenzy. The Nasdaq plunged by 3.1%, but the real shocker? Nvidia, the crown jewel of AI chipmakers, saw its stock plummet by 17%, erasing an unfathomable $593 billion in market capitalization. The last time something even remotely close to this happened? It was Nvidia itself, but back in September, and the loss then was half of this disaster. Other casualties included Microsoft down 2.1%, Alphabet losing 4.2%, and Broadcom crashing 17.4%. The semiconductor index.SEX suffered its biggest single-day drop since March 2020, down a whopping 9.2%. Why this panic? One word: DeepSeek. DeepSeek is a virtually unknown startup from Hangzhou, China, backed by Highflyer, a hedge fund that has been secretly using AI in trading since 2021. But what makes DeepSeek so special? Let's dive into the details. DeepSeek launched its R1 AI model last week, a free, open-source chatbot that has outperformed global leaders like OpenAI's ChatGPT and Google's Gemini on multiple benchmarks. R1 is not only 20 to 50 times cheaper to develop and operate, but it also uses less data and computational power. Let me give you an idea of how groundbreaking this is. DeepSeek trained its R1 model on Nvidia's lower-tier H800 chips, spending just $6 million. In comparison, OpenAI's GPT-4 reportedly costs hundreds of millions of dollars in development and operation. DeepSeek has basically redefined what's possible in AI, and at a fraction of the cost. The release of R1 triggered what some are calling a Sputnik Moment for AI. If you're unfamiliar, the Sputnik Moment refers to the launch of the Soviet satellite in 1957 that shook the Western world, signaling a massive shift in technological dominance. Investors panicked, and rightly so. If DeepSeek can do more with less, the entire AI narrative changes. Let's hear from Brian Jacobson, chief economist at Annex Wealth Management, who said, "If DeepSeek is the proverbial better mousetrap, it could disrupt the entire AI narrative that has driven markets for the past 2 years." And disrupt it did. With investors pulling out of tech stocks, nearly every major player saw significant losses. Nvidia lost billions. Microsoft and Google parent Alphabet took serious hits. Even companies like SoftBank, which are heavily invested in AI infrastructure, saw their shares drop by 8.3% in Japan. This ripple effect spread to Europe, where ASML lost 7%. Here's why DeepSeek has investors shaking in their boots. Cost efficiency. R1 is significantly cheaper to train and operate, making it accessible to smaller firms and individuals. Technological leap. While the US banned China from accessing advanced Nvidia chips, DeepSeek innovated using less powerful alternatives, proving they don't need cutting-edge hardware to compete. Open source. The chatbot code is free to download, modify, and use. This could democratize AI development, but also poses massive risks. Geopolitical risks. With data housed on Chinese servers, concerns over privacy, intellectual property, and censorship loom large. R1 reportedly aligns its outputs with Chinese Communist Party values, raising eyebrows globally. Mark Andreessen, the Silicon Valley venture capitalist, called R1 one of the most amazing breakthroughs he's ever seen, dubbing it AI's Sputnik Moment. But not everyone is convinced. Daniel Morgan, senior portfolio manager at Synovus Trust, argues that R1 competes with AI apps like ChatGPT, not Nvidia's core business and data centers. Still, the markets don't wait for debates. They react. And Monday's sell-off was nothing short of catastrophic. So what does this mean for the future of AI and global tech markets? Let's break it down. Winners and losers. AI users and businesses stand to benefit from cheaper, more efficient AI tools. But for giants like Nvidia, Microsoft, and Google, the rise of DeepSeek could mean shrinking profit margins and increased competition. Global shift. DeepSeek's rise challenges the dominance of Silicon Valley. Are we entering an era where China leads the AI race? Economic and geopolitical risks. While lower costs and increased efficiency are welcome, the idea of China controlling a significant portion of AI technology raises concerns about data security, energy consumption, and even censorship. And let's not forget, the broader markets are also adjusting. Investors are seeking safe havens, driving up demand for government bonds and stable currencies like the Japanese yen and Swiss franc. The fallout from DeepSeek's R1 model is far from over. Will it mark the beginning of a new AI era, or is this just a temporary market panic? One thing is clear, the tech industry and the world may never be the same again. Now here's my question to you. Do you think DeepSeek's rise is good or bad for the global economy? Let me know in the comments below. And before you go, make sure to like, subscribe, and hit the bell icon so you don't miss out on more deep dives into the world's biggest stories. Stay curious, stay informed, and see you next time.